Hello everyone and welcome to my daily report market analysis videos on Friday the 13th of September with me, Richard Perry, market analyst at Hantec. There's still this recovery that we're seeing through the euro actually since that ECB meeting yesterday. There was a bit of a wild ride on markets actually in the wake of that ECB announcement of a deposit rate cut and also renewed quantitative easing, but certainly the euro has found ground again, rallying higher around about 150 pips off the lows of yesterday now, and that's sort of coming as markets are sort of questioning really a couple of things really. I think my take on this is that you've got the no changes to the capital key, which is the 33% issuer limits of the bond purchases. No changes to that, which may sort of restrict this QE infinity unless they do the changes further down the line. But also the focus on fiscal support as well, that the ECB needs to see the other countries, needs to see fiscal support from the countries to help with the heavy lifting really, and again that's question marks surrounding whether that's going to be seen. So we've seen euro actually gaining ground on the back of that and really now decisively back above 110 figure. Other news being that sterling has broken out again this morning above recent consolidation. 23.80 was a resistance, it's now 23.90. Suggesting still that there's a move whereby short positioning is being unwound, and that's helping to drive sterling higher as markets position for a less hard Brexit potential there. And general risk appetite is positive as well. We've seen equity markets all stronger. We saw the S&P 500 breaking out again to multi-week highs on the brink of a test of that all-time high of 30.28. Still in the offing. And generally speaking, it's interesting that we've now got the dollar, which is coming under pressure to the downside. We've seen that uptrend of the past 2.5 months, which is now being tested this morning, really on the brink of breaking now on that move to the downside on the dollar today. With regard to the Fed meeting we've got next week, what is the ECB easing measures? What do they do for the Federal Reserve? Does that now push the Federal Reserve into a more likely sort of round of easing and rate cuts? Is the sort of takeaway from that. Now, in terms of data points today, we've got a couple of really important US consumer numbers out today. We've got the retail sales for the US at 130. Ex-auto is expected to be 0.1%, so continued growth month on month there for the ex-auto's retail sales. But then into the afternoon further, we've got at 3 o'clock the Michigan sentiment numbers. Now, we are looking out for Michigan sentiment, which is actually set to improve slightly to 90.9 from a downwardly revised 89.8 last month, and that is expected to come through improvements in both the current conditions and the expectations components. So watching out for how that does, because the consumer basically does 70% of around of the US economy is driven through the consumer. So consumer sentiment gauges are very important for the US economy. So that takes me to my chart of the day, which is the Australian dollar, which continues to be positively configured. Now, what we've seen is this recovery in the past couple of weeks on the Aussie, which has actually broken out, and I'll show you that this recovery is basically just unwinding back to a downtrend that we've seen on the Aussie since November. And the breaking of that resistance at 68.20 has completed a base pattern, which implies a move back to sort of the 70 figure area. Now, 70 figure is basically where we see that downtrend today. So what we've seen is a bit of a consolidation around the 50% Fibonacci retracement level in the last few days, but the market is now starting to edge higher again. You've still got this positive configuration through momentum, 62 on the RSI. MACD lines pulling positively towards a move above neutral. Stochastics also positive. So you consistently see corrections being bought into on the Aussie. And positive configuration across hourly momentum, although the market has just slightly slowed a little bit in the past couple of days, 3 or 4 days. I'd still be pointing towards positive configuration on hourly momentum, and I think if you did start to see a closing move above that 50% fib level, which is not far off it now, then you would open up at least 61.8% fib at 69.25 as the next resistance, and then a continuation probably towards that downtrend actually in due course. So we'd be looking out for that breakout, and that would happen, as I said, on a closing break above that 50% fib level, which would be an end of that consolidation really effectively, and it would also come with positive momentum as well, and I think that would be a continuation of the move higher. Now you'd be looking at buying into weakness. You've got this nice support band 68.20 up to 68.45 area. Nice band of support now, and I think buying into weakness on the Aussie is still seemingly the way to go. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos, and also go to our website where you can join up for our trading webinars. Thank you.